Hi, let's talk about return on investment today. I Googled what return on investment should I expect here on Google, and I just want to get a feel for, what do people out there like you and I expect to get when they invest their money into a particular investment. And we're looking at the ROI annual ROI of approximately 77% or greater is considered a good ROI investment in stocks. We look at other situations, we can kind of see, okay, how do we calculate it? We got some calculations. Essentially, it's net profit divided by whatever the cost of the investment was. And um, we see that conventional wisdom here is 7%. Good investment in stock. How does this relate to some other things out there? Here are some key returns on investment statistics. Here we've got U.S. stocks have done really good recently. That's not always been the case, but the last couple of years it's been pretty good. 16%, 7.39%. Bonds about 3%, not all that great. Gold hasn't done that great. Or real estate's been doing really good recently also. CDs and savings accounts, next to nothing out there. So anyway, just a little bit of an idea what everybody else is getting out there. Let's look a little bit about return on investment for a construction inspection materials testing firm, um, and how much annual return on on a company of that type. Generally, indicators are somewhere between 3 and 6 or 7% seem to be pretty typical of the industry. And with a good computer system and investing in a computer system to help improve efficiencies in an organization, let's look and see if that's a good investment relative to the stock market or other things that we've looked at, which 7 to 16% I think are considered pretty good. But anyway, we've done a little spreadsheet here to kind of try and analyze profitability or improved efficiency within a firm that does construction inspection and materials testing. What would that look like? And here's a spreadsheet that is available. We can provide this to you. It's all wide open. You can go check and see what any of the formulas look like, and play with the spreadsheet. And it's kind of a good what if analysis tool to kind of to see how your firm might be profitable over the years, even if you don't compare it to a software system. Sometimes it's interesting just to kind of take a look at the different factors that might affect the profitability of professional services type of industry that we operate. So let's just start out with a number of employees. Maybe let's go with 25 employees that we're going to work with. One of the big factors that go into the profitability of a services-oriented company is the billing multiplier. When you pay wages out, we multiply the actual wages paid, times a factor, and get some idea of what how much a billable hour can be billed for relative to what gets paid directly. In our industry, 2.5 is pretty typical. 2.7 up to 2.8. You get into some professional services industries like attorneys, they might be looking at 3.1, 3.3. Programmers are generally up there in above 3. So for every $10 of wages that you pay out, you multiply that times 3, and it gives you an idea of what their billable rate would be. And as we get customers and we establish ourselves within a particular region as the company that provides excellent service in a timely fashion and gives their customers excellent information, we get people lined up outside of the door, then we can go in and increase our multiplier a little bit, because we don't have to compete 100% on price in order to get business coming in our door. So another factor is burdened labor cost. How much does it cost for every hour that we spend? And this is a pretty this covers vacation time, different benefits that go into just the wages that get paid out the door. Another factor that affects these things is what are the percent billable. If we're our people are billable and we have a much higher percent billable, that can make a huge difference. You got principals and upper management that are billable. They're usually not as billable as their mid-level management, and your engineers and administrative support staff sometimes is very, very little billable. And technicians, of course, that's your production. That's where a lot of the revenue for the company comes in, and we want them to be a little bit more billable than maybe your support staff and management type of functions within the organization. And then you've got other operating costs that might go into different things, and to cover the rent and keeping the doors open and paying the heat and all the other just miscellaneous costs of doing business. But if we can actually improve the efficiency of some of these things by just minor little amounts, like if we were able to just up the billing multiplier by just 5%, from 2.3 to 2.415, not a huge increase. Maybe we can get our by being more efficient and using our resources and moving information more quickly, we can be more efficient, a little bit more efficient with our percent billable with our principals and our engineers. And so maybe we can get a little bit of like a 10%. Instead of 65% billable, 68%, from 70 up to 73%. Now, support staff is one of those areas where software systems, where we've focused on really making a difference, because we can automate the generation of reports, getting them out the door, automating our invoicing process, automating a bunch of things that generally support staff have had to do in more of a time-consuming way. We can actually make a significant change in some of those kind of things. And generally, they're almost not billable at all. Maybe we can increase that by pretty substantially. And that might be by transitioning them into doing things that are more billable. And or maybe we can just eliminate support staff and hire more technical billable folks in order to replace those. So that can look like a few different ways of doing that, but it has the same effect. Down here in yellow in this spreadsheet is where we can kind of make some changes. What percentage of our people within our organization fall within the different classes that we have in? How many principals, how many engineers, middle management, how many support staff? And that could be just whatever percentages work for your organization. And then the percentage of employees is just a calculation, and based on the number of employees that we've got up here, that'll get recalculated and then used in other calculations throughout the little spreadsheet that we're looking at here. Average pay per hour is kind of how much do we pay our different people. Obviously, we can change these to be in line with what your pay rates are. You know, if you're in California, might be a little different than Louisiana. It kind of just depends on what the market is in your particular area, but we can kind of get an average for how much we pay per hour for the different types of staff that we have in here, which will relate back to what the percent billable might be, and so on and so forth. Anyway, as you work through these things, you get a burden cost, for over an annualized basis. And then you got revenues for the first year, revenue for the second year, third year, and we do this out over 5 years, and then we can get a bit of a total as to how much total revenue we might be getting over this time period. Then we can take a look at if we have some efficiencies that have worked within our spreadsheet, and our organization runs more smoothly. Maybe people like what we're providing. We're able to be more accurate with the information we generate. We're able to provide that more timely because we can get our reports and assignments reviewed immediately because we've got connectivity between our office and our pickup trucks and our lab environment, and everything is working more smoothly. Maybe some of these things can come through and provide a little bit more revenue, and we can get an idea of what type of returns after we've created some more efficiencies within our organization. So down in this part of it, we kind of go through this same analysis up here, and any of the changes we've made will be duplicated down here. Number of employees are all going to come from this little entry here. So that's the first one we want to put in. How many employees do we have in our organization? And then we can go in and kind of look and see what is our revenue. It's all calculated the same way here, based on the same factors, except this time we're doing our little improvements. So we're going to use this column of numbers to get our revenues and our expenses and profitability worked out. And you'll see that we get a little bit more return for the little efficiencies that we can add into the system. And how does this look relative to the cost of Valhalla software, for example? We can go down here and we can get an idea on what feature sets we include within our system. And generally, with dispatch, automated report distribution, and the full financial package, there's a few minor costs involved here. And of course, we can review that, and you'll know that right up front. We have our services part of it. We have the subscription monthly cost of the software, and then there's a one-time cost for the different report packages that might be available out here. And that's where we see user subscriptions come in here for the first 5 years. We've got the report package fees that show up the first year, but then they don't go. And then there's ongoing training and customization fees. These are just billable services that we provide to help maintain our software, customize it for the needs of our clients. And so we put a few of these in here to kind of to cover some of those costs. And we go look over here. What type of return on investment can we get for investing, some monthly fees and keeping things, having a good system. We're running getting $250,000 annually in revenues, and how that works over the course of 5 years. The benefit that we have, the profit, and the return on investment is 954%. Now, compared to 7% investment in stock market or 16 to 20%, which is considered a really good investment, these numbers seem completely outrageous. But the reality is these are the types of investments you get off of a good information management system. Any company that's out there invests extremely heavily in their information management systems, and construction inspection materials testing can benefit just as much as any other type of organization that's out there. Anyway, take a look at that. If you want a copy of this spreadsheet to play with, we're happy to give it to you. Hopefully your making good return on your investment, and hopefully we can improve that for you a little bit. Thanks a bunch. Talk to you next time.